My subject is corporate accounting. My topic is consolidated balance sheet. Consolidated balance is nothing but holding company's balance sheet. First of all, we want to know the meaning of holding company. Holding company is a company or a firm that owes another company. It usually refers to a company which does not produce goods or services itself, rather than it only for the purpose of owning shares of other companies. Holding companies allows the reduction of risk for the owners and can allow the ownership and control of number of different companies. In the Companies Act 2003, the holding company means a company which has a control over another company by either the following terms. First of all, control of the composition of its board of directors, holding more half of the shares. That means 51 percentage of the nominal value of equity shares. It's hold a company for a subsidiaries as a subsidiary company. What are the advantages? First of all, we want to discuss about the advantages of holding company. First advantages is cost saving. Cost saving associated with the lower overhead. Second one is autonomy, increase the motivational level of division of every executives. Third one is control. Control control with the fractional ownerships. The same side there will be disadvantages. Inherent lack of control and dependency. Second one is limited support, staff support. Third one is partial multiple taxations. That is the main disadvantages of the holding company. Holding company. Next slide is consolidated of profit and loss account. For that, we have any financial company, any companies prepare P&L, but instead of P&L, holding company prepare consolidated of profit and loss account and consolidated balance sheet. In the consolidated profit and loss account of the holding company and subsidiary company are showed to prepare the operating activities of the company. The terms appear in the profit and loss account of both individual companies are aggregated. That means added. The two companies' profit and loss accounts has been added in the consolidated profit and loss account. Uh, while preparing the consolidated, the following adjustments has to be made. First of all, prepare a profit and loss account in a columnar form. Amounts interrelated transactions are entered in the adjustment column and are subtracted. Second one is all intercompany operating transactions such as purchase, sales of goods, interest on loans among the companies are eliminated. Third one is dividend received by the holding company for the subsidiary company should be eliminated because he has become a owner of the subsidiary company. Fourth one is interest accrued and outstanding of debentures of the subsidiary company held by the holding company should be accounted by both and then eliminated. The balance in the holding company columns will represent the total profit and loss account made by the companies as whole. Finally, consolidated balance sheet, there will be the holding company balance sheet alone, pay profit and loss account alone. Next, next we're going to discuss about consolidated of the balance sheet. If it is where the balance sheet of the holding company and the subsidiary companies combined, the assets and liabilities of the two companies will be combined. But a few points has to be considered. First of all, share of the holding company and share of the minority company want to be different. Date of the balance sheet of the holding company and that of the various other subsidiary company must be same. First of all, cost of control. The first one we want to be when we are preparing a consolidated balance sheet. First one is cost of control. The holding company acquires more than 50 of 50% of the shares, which may be either at a premium or at a discount price. Price. If the amount paid by the holding company for the subsidiary company is more than its proportionate shares in the net asset of the subsidiary company, the difference is considered as a goodwill. Suppose it's a less than the proportionate of the share is considered as a capital reserve. Second one, we want to prepare minority interest. Minority interest is a share of the outsider in the subsidiary company. First of all, shares in the share capital of subsidiary company, shares in the reserves, shares in the accumulated losses would be deducted. Instead of that, profit means we should be added. Third one, we want to prepare capital and reserve profit. Any profit earned by the subsidiary company before the date of acquisition is called as capital profit. Instead of that, if the profit is earned by the subsidiary company after the date of acquisition is revenue profit. Next one is unrealized profits. It is the when the same group have been sold out the goods to each other at a profits, but they are still remaining unsold at the end of the year. While the consolidated balance sheet is prepared, the unrealized profit has to be eliminated. Next, bonus share. Issue of bonus share out of pre-acquisition profits. We are going to discuss post-acquisition. First of all, pre-acquisition profits. The cost of control remains unchanged as the share capital increased by the amount of shares of bonus and capital profit decreased by the same amount when the bonus share capital are issued out of the pre-acquisition profits. It should be unchanged, means it's a pre-acquisition profits. Issue of bonus share out of the post-acquisition profits, there is a result decrease in the cost of control or increase in the capital reserve. Next one is elimination of investment in shares. Investment in shares represent the cost paid by the holding company to acquire the shares of the subsidiary company. The investment entitles the holding company shares the net assets. Therefore, consolidated balance sheet, the assets and liability have been merged that of the holding company, eliminate the investment in the shares of the subsidiary company. Last topic is heading is intercompany transaction. The holding company and the subsidiary companies have a number of intercompany transactions. Some are loan advanced by the holding company to the subsidiary company, vice versa. Sale of purchase of goods on credit by the holding company for the subsidiary company. Again, vice versa, there will be a holding company maybe sale to the subsidiary company, the same one. Next, the debentures. Debentures issued by the one of the company may be held by the others. These points would be considered when preparing the consolidated profit and loss account and consolidated balance sheet. Thank you.